Hey, you remember the limbo dance? I mean, if you've been to a wedding recently, you've probably done the chicken dance and the limbo dance. How low can you go, right? Well, that is what everybody talked about when we were referring to mortgage interest rates, right? How low can they go? If you've noticed, they're not going lower anymore. They're actually starting to tick up. So, Brandon Haefele from Catalyst Mortgage, of course. I'm Amy Lewis from the KFBK Morning News. We're going to talk about that because finally, it seems like that the glory days of low interest rates may be waning, right?
Absolutely. We've really seen the past, few months and, going into 2018, interest rates are headed higher. And, there's many factors. I mean, if you had asked me before the election, before our current president, where do I think interest rates would be? I would have said they were still lower. I think in previous Catalyst reports we said they're still going to stay low.
Right.
But really with tax policy change, with the economy really starting to take off, we are seeing improvement. Everyone, we're seeing wage growth. Different industries are doing better than they were 2 years ago. So with that being said, what ends up happening? Interest rates rise. It's actually a good thing that interest rates are rising.
You were actually quoted in the Sacramento Bee recently about that because, you're kind of becoming a voice of authority because, you have it and you have the experience and the expertise. So a lot of people are coming to you for advice on this. So then kind of push us out a few months into 2018. Where do you see interest rates going?
Well,
are we still going to tick up?
I definitely think we are going to start, still see an increase, but I think we're going to end up having a plateau. I mean, at the end of the day, rates can only go up so quickly and at such a fast pace. And a lot of people are now saying, hey, is this going to affect housing? Is this going to affect, people in the Sacramento area? Are we going to have a problem for buyers?
Right.
And really, if you're an entry-level buyer, it will be a little bit more difficult. I mean, realistically, on a $350,000 mortgage, with like 10% down, this could equate out to $18,000 to $20,000 more in interest over the life of your loan. Now, it doesn't sound like a lot when you stretch it out, but it really can affect a person's debt-to-income ratio qualifying for that loan. But moreover, instead of it being 18 people submitting an offer on one home, you might go down to 6 or 7 or 8. And so we're still going to have an economy in a region that's growing, and I do think housing will continue to do well in 2018. But it's just going to be a little bit different. People are really going to have to start navigating the rate market and making sure they're staying educated through that process.
I just got to say this presidency has been very controversial for a lot of people, for the right and the left there. You really don't find a lot of middle of the road people right now.
Right.
But when you look at the economy and when you look at the way things seem to be going for the pocketbook, you can't argue with the numbers.
And I completely agree with you. I mean, again, forget the left, forget the right. Forget political affiliation. The numbers.
Look at the numbers. That's what
right
my
now
husband says.
And that's where we're at. We're looking at where is housing. We've seen wage growth. We're seeing unemployment's low. The important thing is, how are you going to play the game with interest rates potentially rising?
Yeah.
How are you going to make sure that you're qualified? And I think it's important that anybody that's in the process of purchasing, let's say you're a first-time home buyer, you really need to start asking that loan officer, okay, so I'm getting pre-approved at a 4.5 30-year fixed.
Yeah.
What happens if rates are at a 5%? Does my qualification disappear? What happens if interest rates
Does
dip? In some cases, if you're right on the line for your debt-to-income ratio, instead of getting that $350,000, it might go down to $330,000. And so you really need to be really on the offensive here. We don't want defense. You want to be offensive, making sure that you're understanding what you qualify for, what the interest rate is, and then if it goes a little bit higher, what will change for your scenario. At the same time, if you're looking to refinance, many people are saying, well, I have that 3.875 or 3.375, interest rate, 30-year fix from 07 or 2017 or 2016. If you're still looking to pay off credit card debt, if you're still looking to consolidate your equity loan or equity line that's no longer a tax deductible item, it still might make sense for you because, again, you have to look at everything as an overall picture of what you're paying out in interest per month on credit cards, student loans, or whatever it is, and then really what are you going to end up saving on the overall amount. So many people think, one thing, rate. Forget the rate for a second. Let's talk about what your overall savings would be if you're doing a refinance. And so you'll have to kind of look at both of those things.
I know that we have talked about equity line of credit before, but I think it's actually worth repeating because a lot of people don't know that the equity line of credits are not
tax deductible
anymore.
Yeah, the interest of an equity line is no longer a tax deductible item. And so, when you're looking at, okay, hey, I have that 3.8 1.875.
Yeah.
But you have an equity line of $400,000 or $100,000, and so if you're going to be combining that, what's the real interest, the actual interest that you will be paying? But at the same time, what if you are in a certain tax bracket with these changes that the student loan interest, for your child's student loans that you're making the payments on, is now going to bump you out of being able to tax deduct that item. So there's a lot of different factors when you're doing a cash out refinance you want to look at, but also with purchasing. And one thing I go back to what we've said in previous segments is, even if you're going to purchase right now, and then you're saying, well, interest rates are going to go up, and the market is overinflated, I want to wait till it pulls back. Even if you bought today with a higher purchase price, you're actually going to save in interest than if you waited when interest rates are higher to then purchase at a lower purchase price. Meaning, if the values of homes took a 5 to a 10% pullback, you're still going to end up saving in interest. And that's the thing that it also comes into play when you're buying today. Are you looking to purchase for the long game, or are you trying to do something for the short term? Because I'm very honest about this. If you're looking to buy and then maybe in 2 years sell, well, you might want to hold off, and you might want to just look at the market, because if we have a 5 or 6% or 8% appreciation, let's say this year, well, if the next year after that it does pull back a little bit in 2019, are you still in a position that you can sell? So what I'm saying here is, be cognizant of what your personal plans are before making certain investments and certain purchases, to make sure that you're not making the wrong move for yourself.
Let me talk to you about refis, because when we talk about them on the air at KFBK, and you talk about interest rates going up and how it's important to lock in a rate now. So now we know that interest rates truly are starting to tick up. So how important is it for somebody who's thinking, I really want to refi, I don't know if I have my ducks in order yet to go ahead and do that? How important is it to get going?
I would tell anyone that's or looking to refinance, even within the next few months, 2 months, go ahead and start the process now. Talk to a couple lenders, and remember, you can always do a 60-day rate lock. And when you're doing this 60-day rate lock, most companies, let's rephrase, some companies don't offer it. We are one of them. There are a few out there that do float down. So during the process, if interest rates were to drop while you're refinancing, will they float you down to a lower rate at no additional cost?
So is it up to me as the consumer to say, tell me about the float down, and if I get a float down, if it happens, I want that?
Absolutely.
Would you tell me that as a consumer?
We, as a lender, we do. We actually notify, our clients, hey, interest rates are taking, a move.
Remember that term, float down.
Float down. Taking, interest rates in a downward direction, we would notify our clients.
Okay.
So
This has to be a two-parter, right? I mean, there are so many things that I want to ask you, and I know that there are probably things that you're wondering right now. So we're going to continue this next time around, because there's so many more questions about how does this involve you when it comes to interest rates going up? How quickly do you need to go? So you can find out all this with Catalyst Mortgage. Talk with Brandon Haefele at Catalyst Mortgage, 287-7777, or online at catalystmortgage.com. Definitely tell everybody about this Facebook page post too.